And we are live. It's Impact Money, Money in the Morning. We're on the Smart Money Culture.tv network, streaming and playing on television live in Texas and Louisiana. We have the best in finance, early stage technology startups, and we do the stock markets. We do sound money, real money. That's precious metals at Cost Metals Stock Club, and we are going to review all of the current events going on around the world with Bruce Porter Jr. How are you, Bruce?
Doing fantastic. Good morning, Sir David Porter. Good morning, Texas and Louisiana. Thanks for hopping in here early. 5 a.m. over there. It's 6 a.m. here on the East Coast in Washington, D.C., the swamp where I am. Of course, it's 11 a.m. out in Ireland where Sir David is, and Matt will join us soon. He's in Dubai. It's 3 p.m. So we are all around the world. But coming straight to you, I know we have a lot of viewers. We did some numbers there in Texas and Louisiana. We really appreciate all you guys and for tuning in. We have this show as well as another show in about 5 hours at 11 a.m. So thank you so much. It is always a pleasure to come in here and talk about all these types of things. It is a crazy world that we have going on, and there's never a dull moment. We saw yesterday, of course. We thought, okay, there's no way. And I was even talking with some of my friends there at the Annie. We have the Annie rehearsals, and I said, that doggone Fed man cost me a bunch of money yesterday, and they're laughing. And I'm like, it's not funny. But anyway, it's interesting that the administration thought that they were in such a position that they could take a hawkish tone. Because I really had decided I think most of us had they were probably going to not, but I guess they decided they didn't need to, and they took this hawkish tone. So no rate cuts for a little while. So that did play out in the markets yesterday. We looks like we could be rebounding from here, which would be play it as you see. I'm sure Matt will have some thoughts on that as well. But the Dow went down about 300 points yesterday. Dow futures are up just a bit here now. As I mentioned, Bitcoin could be rebounding off of its low of 41,900 per or so. We'll see. Gold as well took a bit of a dive. So what happens when the Fed chair or when the Fed meeting comes out? And of course, the Fed is the central bank. They're the ones who control the currency, which I'm going to talk a little bit more about, as we always do. That's the system that we have set up in this country. A lot of people don't understand it, but that's what they control. So when I say the administration, of course, they work with the different administrations as well. The president and Congress, they usually choose the Fed chair. So usually they'll get some guy that they like in there. So kind of interesting. I'll just run over some stuff here on my Twitter as I usually do here. Let me just pop over here, share my screen. I am a networks manager on X or on Twitter. I still call it X. I still call it Twitter, rather. David is Sir David Porter, and MD Trade, of course, Matt. So you can see we had so Dow futures are up slightly right now. Okay, as it is now. The Dow went down 300 points yesterday, so it remains to be seen if that will rebound. Bitcoin edged lower as the Fed meeting yesterday, as Jerome Powell announced no rate cuts. Will the Fed be able to slow Bitcoin's rise? So this was 42,155. It's at 42,210 right now, just so you know, the live price. Gold slid. It lost. It didn't lose all of its gains yesterday, but it lost about half of them. The Chinese have been pouring into gold, so that is interesting as well. Gold, we firmly believe. I mean, I don't think it's something that we have to believe or not believe. It's a foregone conclusion that gold is a good hedge. I usually ask questions on my Twitter. or on my X so we talk and engage. Do you believe that gold is a good hedge against a bad economy and the central bank controlled currencies? Obviously you can let me know what you think. I think that obviously, that's why it's soaring. So probably it'll be interesting to see. And China, they had their this large housing conglomerate place that is now in bankruptcy court. So people are trying to get out of the currency there and move it into gold, and they're doing that. So we do have our at cost metals. Atcostmetals.com is the main site. Atcostmetals.club. That forwards you to our referral link, and that is that's a club, and you can buy gold and silver at cost, and so that can work out pretty well. I'm going to just show you here. Atcostmetals.com is the main site, but you can see here some of this stuff. Now this is in pre-launch right now, and this is supposed to be launching on the 14th. I got news yesterday. The 14th is when they're planning on launching this of February, which is Valentine's Day, right? So we'll see. It's a new, but it's in its pre-launch, and I think that is, obviously, look, guys, with what they're doing, what the central banks are doing right now, of course, having gold and silver is a great way to take that money back. We talk about that quite often. The monetary revolution, of course, Bitcoin and other assets are as well. They're 42,155. I mean, and now you have these big ETFs and everything in the game. This could, go up or down a lot. So those are high risk. Gold, of course, silver, palladium, platinum. These are lower risk. These are lower risk things. I wanted to show you this because this was pretty interesting, and it has to do with what we talk about a lot. So farming protests in Europe heat up. Last night, they built barricades and set fires outside the European Parliament. They are protesting the new regulations. So what happened was the EU set some new regulations having to do with the environment and everything else, and farmers feel like they're not able to do what they need to do. Obviously, there they are burning. I'm going to play that clip. And they said, interesting how unelected oligarchs took control of Europe using only the central bank and the new currency, the euro. Do you agree? And I'm going to talk about that in a minute, but let's watch this clip. I mean, that's pretty serious.
Those tires are going to burn. There's lots of smoke from those tires.
Yeah. So it's interesting. So I was headed to Kiev years ago. A little side story, and then I'll go on about the currency stuff. I was headed to Kiev years ago to do some fun stuff, and the news back then, it wasn't really like it is today, right? I mean, now we all know everything. I mean, information is just so accessible for everybody. You're right. Look at those tires. I'll back that up in case anybody missed it. See all those tires there? Wait a minute. Here we go. So this is significant. This is significant. I think this is significant. I'm going to play that clip one more time. I just said on my X that it's happening. So I'm going to play that clip, and I'm going to talk while it's going on. So this is outside the European Parliament right here. And I'm going to go back to my story about PA. So what is interesting is, I'm 46 years old, and good morning to you. Always a pleasure to see you here on here and posting away. Nice to see you. I'm old enough to remember Europe before there was an EU. I'm just going to mute this tab so you can hear me better. And I watched how it all happened, how they took over, how they were able to take over Europe without firing a shot and without anything else except the central bank and the currency. So back before the euro started, before they started this eurozone, everything in Europe was very, very cheap. You could argue that it's still fairly cheap now if you go over there, but it's nothing like it used to be. I mean, it used to be really cheap. You go over there, and everybody had their own local currency and their own local, culture and everything else. And I mean, seriously, they would give you the coffee. It was funny because as Americans, we'll drink like 5 or 6 cups of coffee, and they bring you the coffee one by one, which is kind of funny. But that coffee would cost, like nothing. It was like cents. It wasn't even $1. Going out to dinner or something like that would be like $50 or $60 when you did the the currency exchange, and then you didn't tip either. Hotels were all under $100, and then what happened was they started this central bank currency, the euro. And what they did with this, and it's interesting now, again, like if you didn't live through, if you don't see it, it's you don't understand it as much. But that's one of the things that these guys are getting on about. And I don't even know if they understand it all. I should go over there and talk to them. But what they did with the central bank and the euro is they sucked all of the value, or so much of the value, away from all of the countries, and they had it into themselves. And that's what the oligarchs did. The oligarchs of Europe. And they were able to take over Europe, where now you have a European parliament and a European government that nobody elects, and nobody has any control over. And it just like kind of happened. And I don't even think they realized it was happening. It was like, okay, we're going to go on the euro. This is going to be great. It was just a currency at first. Everybody's going to get on the euro. They promised them some freebies. We're going to give you free this. We're going to give you free that. Does it sound familiar? Right? We're going to give you free stuff. Free stuff. We're going to give you free stuff. Nothing's free. Okay? And they put them all on this currency. And then, of course, they inflate the currency a lot, which makes everything more expensive, and then that's the sneaky tax. And then they taxed the heck out of all these poor little European countries, who the average little European had no idea what was going on. And even me, I had no idea what was going on either. It took years of experience and working in Bitcoin and finance and working for banks and everything else, and traveling the world as well, and having the knowledge that I have to understand what's going on. And then, of course, it's great that I can sit here with you and just kind of explain it off the cuff. That's what happened, and that's what's going on here. Right now, they're protesting for their rights to be able to farm. But at the base level, what they're protesting in Europe is the takeover of Europe by the central bank controlled euro. I mean, it's the takeover of Europe by the oligarchs using the central bank. It's amazing to watch. Now, this has happened all over the world. The central bank has taken over everything. And they have these central banks that are loosely connected or very connected with each other all around the world. There's only a few countries that don't have them. Russia doesn't have one. Syria doesn't have one. A few other places that don't have one. And then the central bank runs everything. And that's what we have going on here. Absolutely crazy. So that's that. I just wanted to touch on Kiev, and then we'll because I mentioned it, and then we'll bring in Matt. So I was on just kind of a side story because this reminds me of. So I'm on my way to Kiev, right? I'm like literally like going to the airport, and like news back then, it wasn't like so like it is now, right? And someone says to me, Bruce, are you sure you should go to Kiev? Do you see what's going on? I know what's going on. Yeah, man, huge protest, and this was when Hillary Clinton and Obama were doing their deal, and basically overthrew the government there, or whatever, had some type of a coup. Our friend here was this part of the Gillette? No, this is something different. But they are I'm sure kindred souls and brothers that'll work together. So I'm headed to Kia anyway, and I find on YouTube. I go to YouTube, and because the news wasn't talking about it really, so I find the live feed on YouTube, and it's just someone put a camera up and was feeding Kiev, and it was a mess. It was an absolute just disaster. People all over the place, and then of course I had to cancel my trip. I was really bummed about, but Kiev's a nice place. Anyway, pretty interesting. Let's bring in Matt. I'm sure Matt has a lot to say, a lot to tell us after this Fed. We got some more Fed bashing to do. I think Matt, we have Fed bashing to do.
Good morning. Yes, we definitely need to do some Fed bashing, but let's start with Europe, shall we?
Yes.
Maybe a bit of Europe bashing to start with.
Okay.
So, we actually have European parliamentary elections June this year. We said that virtually everybody's going to polls this year, so the European Parliament are going. But you're absolutely right.
They do elect people just on the magic machines.
Yeah, but you're absolutely right. The central bank itself, the ECB, the European Central Bank, they're basically just appointed by leaders of the Eurozone. So there's the president, the vice president, and 4 other members that are appointed by the Eurozone. So they're unelected. And again, you're absolutely right. You've identified the reason behind a lot of the tensions that are going on. So, Germany was basically the strong economy in Europe, and they set the economic agenda with interest rates and everything. Really, they're basically have been very much in control of the ECB. And with that, the problem is when you have all these diverse countries, as you said, you've got the Southern Med countries, which were effectively low growth countries, low productivity countries, and then you've got Germany, which is very high productivity. And it causes big problems when you have the same currency with the same exchange rate, with the same interest rates. And it means that those who are less productive are at a massive disadvantage, and they just can't dig themselves out of this hole. So Europe is not a fair place to be. For a lot of those Southern Med countries in particular, it's just not a good place to be. And that's why we're seeing a lot of this unease. You're seeing the farmers' riots and so on. And, you can understand if they're suffering and being controlled and not being allowed to not being allowed the freedom. And that's really actually the reason that the UK voted out. Now I know there's a lot of disagreement and so on over it, but I think that I can understand the reasons why there's all that unrest and uncertainty and why UK voted out. Other countries are probably far more integrated and can't get out like the UK, but I think long term, Europe may have some bigger problems to deal with, because this is just the beginning. And we may even see a breakup of Europe in a distant, well, I don't know how distant future, but at some point in the future. So it's very, very interesting that you focused on that today. So that's a little bit of Europe bashing. So now I think it's time for a little bit of Fed bashing.
This guy. I mean, geez, I wanted to just anyway, go ahead.
So I'll jump onto my screen, and I hope you can see what I'm sharing right now.
There we go.
So we'll just start off. We won't go straight into Fed bashing. We'll talk about gold a little bit, because it's looking really constructive. You've mentioned, you're very supportive of gold, and you talk about it quite a lot. So according to this wave basis chart, which is a relatively long-term chart here, going back to 2000, before 2000, it's looking really constructive with wave 1 up, wave 2 down, then another wave 1 up. We may get some short-term downward movement, but I'm saying long-term, this is very, very constructive. And that aligns with what we said yesterday about when the Fed increases the balance sheets. Now, at the moment, they're decreasing the balance sheet, which is probably why you're seeing gold coming down a little bit, or will come down a little bit more. But as I said, at some point, this really ties in very well with what happened yesterday with the Fed. At some point, they will need to start increasing the money supply again, printing money again, and increasing the Fed balance sheet again, and that will cause gold to rally in the future. So slightly longer term, I think gold is a really good bet. This is just an interesting one, actually looking at whenever the soft landing is mentioned in the news, we see that not long after the soft landing, the peak in soft landing mentions, not long after it, we usually see a recession. And again, the grey areas in recession, weeks or months after they start the peaking of mentions of soft landing. And we're seeing a massive talk of soft landing at the moment. And, will it just happen as it usually does? A number of weeks or months after, we're going to see recession. I don't doubt that's the case. Now, we'll just come back to, I showed this one yesterday, no apologies, because I think it's really important to just revisit what we were hoping for yesterday, why we were hoping for it, and what happened. So the most important thing here is the money supply in green peaks before inflation basically peaks and drops. But following that, you then go, when you get money supply going negative, as it has here, you then are normally followed by a recession or deflation here. So we'll see recession after it. So we've already seen basically money supply going negative. So they're withdrawing money from the economy. And we've already seen inflation peaking and coming down dramatically. That's basically telling us that recession is coming. And I have to try and think about the Fed clearly are not stupid. They're smart guys. They know what they're doing. So why are they doing what they're doing? And the only thing I can think of is that there is still a bit of an asset bubble out there. We've got stock markets at all-time highs. We've still got very buoyant cryptocurrency prices. And if recession is coming, which I believe it is, then it could lessen the shock a little bit if asset prices, if the bubble didn't grow, if they started to try to deflate the asset price bubble. So I think that may be what they're doing, keeping rates higher for longer than they really should be doing. Because all the signs are telling us that they should already be lowering rates. Inflation is coming down quite dramatically. And as I said, it's not even demand-driven inflation. This is actually supply, a contraction of supply of oil and grain and so on, which caused the inflation. So it's not demand-driven. So there are very good reasons, if you want to keep the economy moving forward well, there's very good reasons to be lowering interest rates. And yet they didn't yesterday. And they didn't even give us a firm date as to when they are likely to. They just said data dependent, which I guess is what we'd expect. But I was very, very disappointed by what happened. And again, we showed this one yesterday, and it is good to revisit to see again what happened. That basically unemployment rate is really good at the moment, but we've seen inflation peak and already coming down, and then we've got this inverted bond yield, and that is the best sign that you'll find anywhere. Just Google it, and you'll find that inverted bond yield tells you recession's coming. It happened here, happened here, happened here. Here. Well, basically, we just about avoided recession here, but we didn't quite go inverted there, but now we've got an inverted yield curve. Recession will come because it always does. So I really believe that the recession is just around the corner. When that happens, it'll be a nasty shock to markets, but they will start printing money again. That's when gold might take off. And that's when the limited supply of cryptos and so on might take off too. So here's the Fed chair himself, looking for inflation to continue to fall, basically to continue to go down as it has. So they want more confirmation, even though it's really moving well in the right direction. And in fact, looking at some measures, they're already below their target rate. There's real downward pressure on economic activity now. and we'll see that filtering through into jobs and so on in the coming weeks and months ahead. So I don't doubt they'll probably change their mind by the time March comes, the next rate meeting, and maybe even before that we'll start to hear noises. So short term, though, we basically still have the S&P riding high, Fed funds where they are, but it's looking as though we probably have a little bit higher to go. But as I said, you can see that whenever the Fed funds peak and turn around, you normally see the S&P turning around. So we've seen Fed funds peak and turning around here. They've actually started to, they're turning around. So I think we will see the S&P turn down soon, but maybe not quite yet. But again, there's all those recession signals, warnings there that we've got another recession warning right now. So how does this affect Bitcoin? How did yesterday's news affect Bitcoin? Well, we still don't know from the FTX low, and that was great news, by the way. You probably heard that all the FTX creditors will now be paid off. So whilst it was a bit of a Ponzi and a bit of a scam, they did actually still invest money in some places that did really, really well. For example, like in Grayscale. And as we know, they invested at massive discount in the Grayscale Trust, Bitcoin Trust, and now that's been converted to ETF. They're able to exit, and they're able to exit at massive profits, which has helped them able to meet the creditors. So that's good news. But Bitcoin, we don't know yet whether it's ABC higher or 1, 2, 3, but it looks, whichever way it is, it looks as though we are still headed a bit higher. So for the time being, I think it's a fair bet that the prices are going to continue higher with risk assets. And we'll look at the S&P in a moment and see that also with the S&P, we're probably going to head a bit higher. So things move up from here, from this cycle in 5 waves. So we've got 1, 2, 3, 4, and we do expect a 5th wave to push higher. And even within the 5th wave, that itself will be broken down into 5 waves. So I think we've had a little 5-wave move here. If you look carefully, you can probably see 5 waves up. That's the wave one.
Run it by again so everybody can see it. 1, 2, 3, 4, 5 with your cursor.
Yeah. So basically from this, where I've got labeled wave 2 here, or B, from there, I'm counting 5 waves up. So I've got wave 1 here.
Yep.
Wave 2 down. So wave 2 is a corrective wave down. It cannot go below the start of wave 1, which it didn't. So that's a perfectly valid wave 2. So wave 1 itself will be an impulsive wave in 5 waves. So we've got 1, 2, 3, 4, 5, ending diagonal wave 5. Then you've got an ABC wave 2. Then the wave 3 is normally the biggest wave, and again it is the biggest wave. And if we put the Fibonacci measuring tool on, I think you'll find it's probably 1.618 or even 2.618, but it will be a Fibonacci golden ratio expansion of this first wave to give us the wave 3. Then we've got a correction wave 4. Then the wave 5 itself will be made up of 5 smaller waves, and I've already got that labeled in here in this small blue count here. Wave 1 up, which itself, you can hardly see it probably, but it's 5 waves up to give you wave 1, then ABC wave 2, close to finishing, and then we should push up fairly strongly, fairly soon in wave 3. So
which is the strongest wave. Wave 3 is the strongest wave.
Yeah. Wave 3 is nearly always the strongest wave. Wave 3 is not allowed to be the shortest wave. It's nearly always the strongest wave. There's a big percentage margin that favors wave 3 being what they call the extended wave, which means it will be at least 1.618 times the wave 1 or wave 5. So wave 3 is normally the biggest one, and it often extends much more than that. You got 1.618, 2.618, 4.236, and so on. These Fibonacci relationships, it can really extend and be powerful. And you've seen that here. When we got the wave 1 up, you can see the magnitude or size of that wave 1 is relatively small. Then you get a wave 2 retracement. But you can see the wave 3 in comparison is so much bigger than this wave 1. Yep. And that's usually the way it is. So even within a wave 5, even within this smaller fractal, you can see the wave 1, the magnitude of that, and the wave 2 down. The wave 3 should end up being just like this in scale, much, much bigger than the wave 1. So we would expect that we're probably going to see still some reasonable movement up to take us above the top of this wave 3 in Bitcoin. And all the fundamentals are there, aren't they? So we've got the ETF approvals and the new ETF applications, and so many positive things. And as I say, I think that, the monetary outlook roundabout is still not too bad just as yet. And as I say, I think we're also seeing some sort of peace dividend now that's a little bit less pressure. We haven't heard much about the Middle East the last few days, have we? We haven't heard much about Russia, Ukraine, or China, all these things. So geopolitical front is a little bit quiet. So it sets the right background, right environment potentially for assets to continue rising. And here's a little look at volumes on Bitcoin. And even though the price of Bitcoin fell, we can see that the volume is basically also falling. So it's negative price volume. The red candles here are negative price volume, but you can see that the magnitude of the negative volume is falling. So that means there isn't really a lot of force behind this downward move in Bitcoin. It's telling us that there is likely to be a resumption of an upward move because there isn't really powerful downward movement in volume. So it's not supported, the down move is not really supported by volume. So it's telling you that there is likely to be a further move to the upside. I'd like to touch on Bruce's, one of our favorite tokens for trading, ICP, because it had some amazing Fibonacci relationships that we tracked along the way, which gave us perfect targets for the price. And this was when we had that little panic of a sell-off. We had the ABC down. I posted this on Twitter, but quite interesting. A lot of people were beginning to panic, but we had a very nice sort of hammer candlestick here. That's a kind of hammer candlestick, which is a very bullish candlestick, especially when it's at the end of a trend like this, and it signaled of upside to come. So we've had that really good upside. We were telling people not to panic. It's had all the hallmarks of being a correction, basically, to the downside, meaning new highs are incoming. So I still believe that to be the case. I think what we've had from the top is an A, B, C. So as opposed to those 5-wave movements, impulsive movements that we talked about on the previous slide, this is a corrective movement, which is just in 3 waves, which is against the trend here in 3 waves. And the prevailing trend is upwards still. The big strong movement is upwards. This choppy move down is just a correction. And as I say, we got a beautiful hammer candlestick here telling us price was likely to push higher from here, which it did do. And even yesterday, with that really lackluster Fed news, with no commitment to anything dovish or dropping interest rates or anything of the sort, even though we still got some positive movement out of ICP and moving again to the upside, with likelihood that there's always the possibility that we could have a 335 down, so it may not be finished, but it's looking like the correction's over here. And we should potentially see some further good movement to the upside to complete this upward move in ICP. The S&P, I think it's worth just looking there because that again had some interesting moves yesterday. During the Fed news yesterday, came down a bit because obviously everybody was disappointed, hoping we get a bit more dovish news. But again, here we can very clearly see this beautiful 5-wave movement to the upside. You can see the wave 1. The wave 2. Now the wave 3, what we did, we measured the magnitude of this wave 1 and just transposed that over to wave 2, and it told us where wave 3 was going to end. 1.618, the golden ratio yet again. The number of times that turns up in trading, particularly in relation to wave 3, is absolutely mind-blowing. And then we got a wave 4, and I think we're working on a wave 5 up to complete a B wave, which would be here 1, 2, possibly 3, 4, and pushing up in a 5. So a little bit like other risk assets, I think we are looking for a 5th wave higher to complete the current move up. So looking really promising. And just last of all, I think we'll look at crude oil again. We've said for some time that we believe this was an ABC correction higher, and we're probably going to be moving down. If it moves down substantially, it's probably good for business. It's good for lower inflation. It'll give the Fed some ammunition to potentially lower rates. If they see oil prices coming down, it means the cost of everything that's based on oil will come down, manufacturing, transport, everything. And so inflation down will give them the excuse that they need, or whatever they're looking for, even the ammunition they need to tell them to reduce interest rates. And that, if that reduces interest rates, then it'll give us a push up in risk assets, Bitcoin, S&P, all those risk assets that we like to trade. So just, again, just to show you, reiterate, money supply is coming down. They're withdrawing money from the economy. economy right now. The economy is slowing down, and they're actually going to bring about a recession because of it. So, here's the sign that recession is coming. The Fed funds rate peaked here. Every time it peaks, recession follows. We just see it. It's just a formula. It happens. So Fed funds peaked.
Can you explain the Fed funds, just for our viewers?
Yeah, basically, it's effectively what banks have to pay to borrow money, and obviously that's passed on to consumers. So whether you're starting a new mortgage, whether you have a business and your business expansion is funded by debt, and whether you have credit cards, borrowings of any sort, obviously you're paying interest rates. And when Fed funds rate is higher, it's basically the interest rate. If it reflects into the interest rate that you have to pay. So that's what the Fed have been doing. They've been raising the Fed funds rate to try to slow the economy. And the economy has actually been really resilient, to be fair. It's done very, very well. But we are now beginning to see the economy just beginning to slow. And I don't doubt the next move will be downwards in interest rates. And I think the Fed kind of intimated that anyway yesterday. They said they may not be ready to actually move in March. It might not be March that they move, but they'll certainly be talking about moving in March. And I believe they probably will move in March if we start to see some downward signs. But the environment is moving over towards being more dovish, towards wanting to lower interest rates, because once the economy starts to slow, you want to take away those headwinds. You want to actually enable the economy to grow. And so you need to lower interest rates and lower prices to give people a chance of making a living, of business making a living, of business being profitable. So every time the Fed funds rate has peaked, we're followed by recession. So these gray areas are recession. The blue line is the Fed funds rate. So you can see every peak that we've had has been associated with a recession. The only one that didn't, I think, was 1995. I think that's probably the only time pretty well it wasn't immediately followed by recession. So yeah, it's pretty much nailed on that that's what's going to happen. And especially there's so many other signals, as I say, the yield inversion is telling us as well that we're going to be getting recession very soon. So I think that summarizes where we're at. Very disappointed with what came out of the Fed, I think, yesterday. But as I say, I think there must be some reason behind it why they're not lowering interest rates yet, because all the signs are that they should be. But as I say, maybe they're wanting to just lower asset prices because...
No, I go ahead.
No, you tell me.
Oh yeah. Even as we're doing our show, I mean, that's one of the great things, right? We get to, if you just had a meeting of some of the people that you respected and really, every day, you would come out. And so that's kind of what we have, right? We just do it in public. But as you were saying, I mean, the market is going to rebound anyway. So what did they need? What did he need to raise the rates for? He didn't need to raise the rates. He can continue to suck the money out of circulation. The assets, I think, are still going to trend up for a while here, and so he didn't really need to. And then unemployment, I know it sounds funny to everybody, but they don't really want everybody to have that much money. I mean, that's kind of the game, right? Because if they have more money, then they can spend it more, and then that makes inflation higher. So,
yeah, they want to control everything, don't they? So
they do.
Clearly, they want to try to maintain reasonably full employment. They've said over and over again that's part of the Fed mandate is to actually maintain full employment as much as possible. And stability. So, to be fair, in some ways they've done a good job so far, but it's just that we see this over and over and over again. That every time these crises come about and we see a peak in inflation, they're too late in lowering interest rates, and it always brings into recession. So every time you get a peak in interest rates, it's followed because they act too slowly. And this is, people are crying out. I've seen a lot of independent analysts were saying he really should have lowered rates yesterday, or if not lower them, but at least tell us that lower rates are coming. But he didn't. And he says it's data dependent. What more data does he want? Because all the data is telling us the economy is beginning to slow. High interest rates have worked, and inflation is coming down dramatically. And as I said, some measures of inflation are actually now below target rate. So the problem is this causes more volatility in the future, because if they undershoot now, whether you call it undershoot or overshoot, but basically if they act too late now, it will mean that the economy slows down too much. Then they will need to lower rates even quicker. So you basically get more of a whipsaw effect, rather than try to maintain some stability, which is what businesses love, and they're crying out for just some stability, so they can actually plan their businesses better. And that's what business does. They want to plan their business. They don't want to be worrying about all this economic uncertainty. And I do really believe the Fed could do a better job, unless there's another reason behind it. And maybe they're seeing things that we don't see. Maybe they do see, a bubble bursting this coming year. If they see that already, then probably that's why they're keeping higher rates, to try to rein in these increasing asset prices. So I do think that asset prices will continue to increase in the short, medium term. So I think that's what it's all about.
Yeah, pretty interesting, for sure. I think Matt should be the Fed chair. Matt Dixon for Fed chair.
Yeah, you have to be born in America, don't you?
I don't think so. Just to be president, you don't even really have to do that anyway. They do whatever. I think Nikki Haley wasn't born here or something, and she's running for president. I don't know that for a fact. People say that Obama wasn't. I don't know if he was or not.
Wasn't he born on a base or something? As long as it's an American air base, that's fine, isn't it?
If it's of course, if you're on some type of, if your parents are working and you're born overseas and they're on assignment and it's on a base or something, then yeah, that counts. I don't know. I didn't want to open a can of worms. I was just saying there is precedent. It seems that they're kind of moving the bar on that, and now they're saying natural born American doesn't really mean natural born American. Doesn't really, so it's all up for discussion. It seems like, and we have so many people in this country, especially now, that haven't been here that long. They came, the last 50 years, 60, 70 years.
I think it's not altogether a bad thing. I know you talk a lot about immigration and so on, but immigration does actually fill a lot of jobs that a lot of people don't want to do. We have that in the UK. They were trying to cut immigration, and I think it has gone down a lot. But people. Well,
I think that in general, absolutely agree with you. But if you're trying to grow a country, if you take a look at the macro part of it, what you want is your citizens to have kids. You don't want to import a lot of different migration people into that. You want families to grow. You want families to have 3, 4, 5, 6 kids, instead of having 1 or 2 or 0 and bringing in 8 to 10 or 5 migrants per person. I mean, it's a bit out of jointed. And I understand what you're saying is correct. If you on the balance sheet, okay, we bring in more migrants, that means more of this, more of that. And of course, as David and I have discussed a few times, central bank issues a bond for these people every time they come in, and then they can trade that bond. It's more money in the economy. I get it, but we're better off as a country to have the kids ourselves, to have the people that are here having the kids.
It's an unnatural immigration that's happening.
Well, that's true as well. We have, our borders.
I agree, but as economies mature, it would be good to have more kids. But Japan has this problem of now they don't have enough kids, and the population's growing really old, and that's actually a problem they've got to deal with. And that is the problem as economies tend to mature, that people have fewer kids, and however much immigration you have, unfortunately, it's just the way of things.
Pfizer's not all bad, guys. Okay, that blue pill is pretty good. Not that I would know from personal experience or anything.
Yeah. So.
Whatever we got to do. I feel like to import people is whatever. But I overall we totally agree that of course the more people that you bring into the economy is better. There's different things that can arise from that, but.
There's also a lot of in the UK, as I say, there's a lot of people don't want to do a lot of the more mundane basic jobs. So, for example, fruit picking. there's a lot of farming goes on in the UK, a lot of fruit picking in the summer, and we can't get any British people to pick this fruit. And since we came out of Europe and we don't have so many people coming in from Europe now, they're not picking the fruit from the fields. And then there's other jobs as well that just don't get done. So it's just, maybe it'll change what you said the other day. I think you posted something about an AI robot.
I'm gonna show it. I know. We commented. It was funny, actually. I love, LinkedIn is funny because you have to tickle that algorithm, and a lot of people were like, "Oh, this," I got some funny comments on that, but I just kind of let them go because I did it. I'm not insulting anybody with a lower IQ. The fact of the matter is, there's people with a much higher IQ than me, and there's people with a much lower IQ than me. It just is what it is. It's not it wasn't a statement of anything other than what are the lower IQ people going to do once these machines start taking over. And of course, this is some AI or CGI, whatever generated stuff, but it is kind of a interesting video. I think it got almost 800,000 hits or something on X. Let's take a look at this one here. Look at this thing. I mean, got the music too, intimidating music. I mean, that's one thing, but we also have, a lot of, it's something I talk about sometimes. This is pretty interesting too. I mean, look at this. It goes around and cleans manure for the farmers to throw in the parliament. Where will the farmers get their manure? Anyway, yeah.
That's good, actually. Good. They're doing a lot of the jobs that nobody really wants to do. And so I think the answer to, as I actually posted as a reply to your tweet or LinkedIn or whatever it was, that we're going to have more leisure time. All of us are going to have more leisure time. And it just needs to be shared out evenly across the board that we've got machines now to do stuff that we don't want to do. So let's just enjoy ourselves a bit more.
Let's enjoy ourselves a bit more. Doesn't matter if you're low IQ or high IQ people. Okay.
Absolutely.
Anyway. All right, well, Matt, always a pleasure, brother.
Yeah, thank you, Matt.
Yeah, thanks, David. Thanks, Bruce. Catch up tomorrow. All the best to everybody.
We will see you tomorrow, and I'll try to clear out the stuff. I'll talk to David. I know I missed a message. I just saw it this morning from our friend there in our chat, so we'll talk about that. I'll get it done.
Thank you.
Cheers.
Swell.
All right, here we go. Well, there you have it, guys.
Yeah,
Matt Dixon, the great Matt Dixon.
Expecting an uptrend.
Let's go with the Fibonacci bashing of Jerome Powell. Matt Dixon for Fed chair.
Yeah, I like this.
Me too. So crazy day. It was pretty interesting analysis as well. I think of the European situation that we have going on there, and I think crystallizes exactly what we have going on in this country and around the world with the central bank takeover of the different of power, takeover of power by the central bank, which is and then they control the currency. And of course, if you control the purse strings, then you can control the country. So one of the ways, guys, that we can fight back is, of course, like we always talk about with crypto, right? And with gold, with precious metals. And that's a really important thing for everybody to realize, because even though they're still tightening things right now, I do believe that obviously they're going to continue printing. They're going to continue inflating the money as we go, and you need a hedge. You need to be able to hedge your bets. Now, again, I'm not a financial advisor. Okay. So, we do our show every morning, and we do, that's what we do. But I should say that. So one of the ways you can do that is, of course, with @costmetal. @costmetal.com is the club. @costmetal.club forwards you to our referral link, which is clubs on there. And this, I believe, is launching on the 14th. Okay, so you can buy gold, silver, palladium, platinum at cost. And it's, the prices that they have there are really good. There's also an affiliate program or a referral program if you do want to get involved in that and to make some money. And that could be quite interesting for everybody, for sure. And I think that's here. Let me actually, what I'll do is I'll share this again. I have some videos over here that I have queued up. Now, if you go to my profile, which is @Works Manager, of course, Matt is MD Trade, David is Sir David Porter, but you can have a link for here for @CostMetal, @CostMetals. And then I have some, hopefully, well, there's a lot of retweets here, but let me get to some of these here. Easier way to do it. Some interviews. I went down and met with the founders. You can see that on here. There is, this is how you sign up. Okay, I'm going to play this. We're in pre-launch right now. You can sign up very easily.
Hey there, future affiliates. Let's talk about pre-registration. It's a tad different from what the process will be at our official launch. But don't worry, we're here to guide you through the steps to ensure a seamless registration and sign up. First things first, you'll need the link or referral code from the person.
Sorry about that. Hold on here.
Who introduced you to @CostMetals. If you use the link, it'll take you directly to the sign up page. If not, no worries. Just head to our homepage, click on sign up, and enter the referral code. Here's a pro tip. The referral code that you use to join will be displayed at the top of the page. It's a great idea to double check this before you
Been going good.
Start filling in all your details. This will ensure your proper placement in the genealogy. Next, you'll enter your basic contact information. Be sure to double check the placement settings at the bottom to align with your building preferences. They are the default settings you use to place your referrals. You can select either outside bottom left or outside bottom right. And if you want to activate your holding tank, you can do that too. The maximum time for using the holding tank is 24 hours. It's also important to note that you'll be placed into the genealogy only after you verify your email and added funds. It is a good idea to add more than $25 worth of Bitcoin, Doge, or Litecoin. You can send more and use those funds to verify the accounts of your referrals or towards any purchases in the future. Doing this helps to speed things up. It is faster and cheaper to use Litecoin and Doge. We will also be adding debit, credit, and ACH options. Keep in mind, your referral link won't function until your email and proper payment amount is verified and you are placed in the genealogy. We've put these measures in place to prevent the genealogy from being flooded with free accounts. And remember, the funds you sent are not a fee for early access. The funds you send are there to activate your account at launch or to use with any transactions in the future. Thanks for joining. We look forward to working with you.
So guys, this system we have as well. I mean, I'll pull up our Global Boost site here. Global Boost. That's Global Boost with a dot after the O, and it's ST domain. So Global Boost, and you can see here. Wonderful, system that we have set up, and we're in our 10th year. It's a media coin. We're building the decentralized media network on this. You can get involved here as well. It's a different setup. I can tell you, join the club, buy gold and silver, but if you want to do it this way, maybe it'll work out better. And you can see here we have our different exchanges, and you need to get some Bitcoin or USDT or whatever you want to use, and then go over to the exchange and get it there. And that's the way these things work. And see, free speech, what we're working on, freedom of speech isn't just a right, it's the cornerstone of progress. Let voices resonate, ideas clash, and minds awaken. Embrace the power of words, for they ignite and shape tomorrow. So we're obviously big proponents of free speech. I think obviously it's very, very important. I actually put out a post this morning. Why do you think that the deep state or the administration state wants to stop free speech so bad? If you click over here, we have our Coinomics. You can see that we have a breakdown of it right here. Max coins will never go over 30 million coins. It's probably even less, but that's max that we're showing right there. And so it is very similar to Bitcoin. It's very similar to Bitcoin. In the fact that we just forked Bitcoin, we put in a new hashing algorithm so you can mine it with your PC. And that information is actually on the website too. If you go right over here, miners, okay, and we have the different miners that you can use. It is not, it's technical. That's what I always said about Bitcoin. So Bitcoins were always hard to get. So is Global Boost. It's not easy. It's easier to do a lot of other things. But the payoff, of course, could be, possibly a lot bigger. I mean, that's how things are, right? When they're hard to get. So the way that we produce these coins, or not even we, the way they're produced is through a process of digital mining, and people put the miner, and then they use their computer power to mine the coins, and then everybody competes for the different. How much of the share that they get. Right now, we're producing about 30. I got to stop saying there. That right now, it is producing about 3,500 coins per day, just like Bitcoin. It halves every so often. So it has every 240 blocks, and that next halving this time around happens to happen right around the time of the Bitcoin halving. So that should be pretty interesting. So at that point, we go to 1,750 coins per day, which is really not a lot. And of course, they have people have been, speculators have been taking some positions as we move forward. We also have some other technology and updates that we've been working on very hard to get out there to everybody. And there you go. So check that out, guys. These are two ways that you can get involved right away. You can join the monetary revolution without really doing too much, okay? Right here at Global Boost, and then as well at Cost Metals, at costmetals.club, forward you to the referral link and get involved. You know what I mean? And again, we're not financial advisors, but if the monetary revolution is real, and we have the central banks that have basically bypassed the governments all around the world, and that's the situation that we're in, and we need to save ourselves. And here's a way that we can do it. We can save ourselves. So check it out, David. It is always a pleasure. Thank you for joining, and always being here and doing the deal. It is good times, and I'll see you in a few hours.
Thank you, Bruce. Yes, private property, private money, and private communication.
That's right.
We'll see you soon.
All right, talk soon.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.